The Nigerian equities market reversed some gains recorded just last week as profit taken in bellwether stocks pushed the all-share index up to year-to-date performance to 16.3%. Now I have Ofojebe, the head of research at Vetiva, joining me virtually to have some discussions on what's playing out in the equities market today. Thank you very much for joining us on the show today, Luke.
Good afternoon. Thank you for having me here today.
Now, let's start off the conversation really now with the intricacies that played out last week. Investors lost about 189 billion naira just last week, and then talking us through the play out here and then the opening sentiments we have for today. It's a fresh new week.
Yes, like you rightly said, in previous trading sessions, especially in the last couple of weeks, we've been seeing more sell-offs in the equity markets, and the reasons are not far-fetched. One, interest rates are rising in the fixed income space, mainly a reflection of the increase in the MPR by the MPC at the last two MPC meetings. So as a result of that, we are seeing investors move funds away from the equity markets to play more in the fixed income space where yields are rising. Then also, when you look at where inflation is at currently in the Nigerian economy, at the moment, headline inflation is already around 20%. And looking at the latest earnings results from the listed companies, clearly you could see that inflation really impacted their bottom line significantly. We saw margins drop across board. That's in the consumer goods sector, industrial goods, telecommunications, for a number of players listed on the exchange. We saw a significant drop in margins as a result of these heightened inflationary pressures. So because of that, investors are also trying to be cautious at this point in time because they are worried that subsequent performance may not be too good. And that's why you see investors also moving funds away from the equity markets to play more in the fixed income space.
Okay, now one of the biggest highlights we also have is from the banking sector as well. This is earnings season, and another exciting news is the fresh reports we're having from EcoBank Group appointing Jeremy Awori as Chief Executive Officer. How do you see this exciting investors here and also pitching their tent with EcoBank Group?
So going by historical performance, really, Nigerian equities really don't react significantly to news of this sort. So I do not think it's going to materially impact the stock in any way. And at this point in time, the major driver of sentiment for the banking stocks is actually the increase in interest rates. So typically you expect that an increase in interest rates should translate to an increase in interest income for a number of banks. And also an increase in interest income from investment securities. But at the same time, the CBN recently increased, savings rates to about 30% of MPR from an initial figure of about 10% of MPR. So that should also translate to higher interest expense. So for the banks, the increase in interest income due to the increase in interest rates could be to some extent reduced due to the increase in interest expense that we also expect. So we do expect that to be a major driver of sentiments going forward. But in terms of performance, it should be much better than what we saw in the first half of the year.
Yeah, and we also have some news from Northern Nigeria Flour Mill as well, releasing its first quarter audited financial report and also issuing about 25 kobo dividend for investors. Let's talk about that as well.
So looking at the results, clearly the company made better profits in Q1. Profits increased from about 80 million to about 160 million. So that shows considerable improvement. But from the grand scheme of things, the result wasn't that great because when you're looking at a company that is reporting a top line of around 4 billion naira, and at the end of the day, you're only reporting profit of about 160 million. That's what we saw. And this is mainly due to the impact of inflationary pressures on their operating line items, operating cost line items. Because of this, we've seen margins drop significantly, and that was what dragged PAT performance for the company. And it's not just NNFM in this case; it applies to most of the companies in the risk sector, especially for companies in the consumer space, consumer goods space, where competition is very stiff and increase in pricing is not as much as what you will find in other companies. So going forward, we think that may just sustain for subsequent quarters, given that inflation